Hello everyone, this is Evan from the Trade Risk here on Wednesday, January 20th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, individual names, and then get into some trade ideas for the rest of the week. Now, a absolute roller coaster session today, one for the history books. We ended up closing down 1.28% in the S&P 500, but at one point we were down, I believe, north of 3% on the day. And this is coming at a point where we've already seen sort of relentless selling pressure. We've been selling off all year. We've been stretching the rubber band further and further. And then, of course, today with this big gap down and the trade lower, you got to think maybe we have some type of tradable bottom in right now, but let's take a look a little bit closer and see what we're working with. If we look at a weekly chart in the S&P 500, the SPY ETF, you can see we made it back down and undercut all of these recent lows here from the past 2 years. So we got down to 181.02 today, and you can see we took out these flash crash lows here from October of 15, and we also took out the lows from 2014 October. When I say took them out, I mean we undercut them, we retested them, however you want to think about it. Now, of course, we did bounce strongly off of them. That's constructive, but now we need to see how this market reacts, what kind of bounce we actually get from here. Just given the straight line sell pressure and the disregard for sort of oversold conditions and you know, selling at, you know, pretty much just liquidating regardless of the price, we have to be concerned here. We have to gauge this bounce, if we even get a bounce from here, continuation higher, and just, you know, keep a careful eye on that. Of course, we have all of these now fast-moving averages racing lower, so we have sort of bearish short-term momentum, intermediate-term momentum, all favoring the bears right now. So it is certainly a time to be cautious on that intermediate horizon. But again, as we mentioned briefly in the intro, very oversold, very stretched conditions. I mean, basically going back to 2008, maybe 2009. I mean, those are the last times I'm seeing most of these readings on internals as far as number of stocks below their 200-day moving average and, you know, various other moving averages, the McClellan oversold. So, you know, definitely the market has taken a beating. Doesn't mean it's done. And it doesn't mean we can just easily buy now, but we do want to recognize where this bounce took place and, you know, sort of see if there is opportunity here to perhaps play for some more follow through. Again, you have a few levels above us, many levels above us to sort of work against. The highs from today, it's basically this level right in here. We're going to have to go down to a 15-minute chart to take a look at it. But if we take a look at where we basically rallied to late this afternoon, right into this 187 and a quarter slot, that's certainly going to be the first target. You can see we chopped around in here. We traded quite a bit in here yesterday. We had that late day rally pushing us above it, and then of course the rug got pulled this morning for anybody who tried to buy this late day sort of rally up the positive. So that's going to be the first band of resistance, if you will, and then not far above it, I mean 188. You know, you really have 188, 187, and then, you know, the big level here, which I think might be a longer term target if we do get this multi-day bounce, is going to be up here right around 194 or so in the SPY. Now, of course, we don't have to get to any of those levels, you know, in a straight line. There could be a lot of chop. There might be another retest here of these lows or some type of undercut. You do need to keep all of that in mind. We are still trading again with fast moving averages all sloping lower, bearish formation, and just strong momentum to the downside. So you still have these two competing forces. We've talked about this now for some time in the newsletter, last week's video. You have that rubber band that's really stretched to the downside that wants to sort of you know, retract back to its normal size. You also just have very pent up, you know, strong get me out of this market selling, and those are the two forces that just generally leads to these types of days where you see 7-point intraday ranges. So as swing traders, probably not a whole lot you're gonna, you know, you really can do here, and you know, it's day trading paradise if volatility is something that you embrace in your strategy. So The levels to look at above, we just discussed those. On the downside, today's lows, and then there isn't, as demonstrated on the weekly chart, a whole lot else to go, to cling on to if we start to break below 181. It gets really thin. Price can move pretty quick. Now, we've already had a 13% decline, so it's tough to imagine we're going to fall another 10, 13% in a straight line, but I'm sure, crazier things have happened. So that is sort of the stance here on the SPY. I think if you're tactical, you can put on some long exposure after today. I mean, again, we still closed down 1%, but it certainly seems like a victory given where we were. We put on one new long position today, but we're still very, very light, basically all cash. Until we see this market sort of stabilize and not, just not waking up to gap downs every single day, I think that's what you sort of need to see before you start to put capital at risk overnight. Now, if we look at some other markets, IWM, this one, again, huge range today, down almost testing 95. You can see on a weekly chart, we are below everything. We're below the 2014 lows, and we're in this 2013 run-up that we are retracing. So not a whole lot of previous pivots to work with. There are some of these lows in here that we tested today as we were grinding higher in this trend throughout 2013, but those were so long ago, there's not a whole lot of previous price memory with heavy supply like the S&P 500 had. So the IWM still, they managed to actually outperform a little bit, closed positive on the day today. That's very constructive, coming almost back to that $100 level. You can see fast moving averages still racing lower, so you still have a very steep downtrend. See if we can get some more continuation to the upside here in the IWM. Looks promising, looks like a start, and again, we'll have to be mindful of that bounce if we do see follow through tomorrow. The Qs outperforming a little bit as well relative to the S&P 500, down 31 basis points and back above $100. You can see here on the weekly chart, most constructive out of all of them. You can see it basically overshot but found support right around here, right at this $99 level on the weekly time frame. So we do want to see a close above this level this week to make sure to see if this actually sticks and to see if this was some type of legit overshoot here. So Qs, again, still a constructive area to be if you are in this market, and still oversold, still have lots of levels of supply to work above if you're looking for higher prices. Now, if we look at some other markets, TLT had a nice gap higher today, broke above this 125, certainly where money is hiding out here with the recent fallout, globally, really. There aren't too many asset classes that are actually holding up this year. TLT bonds are one of them, so up 74 basis points this week. Looks constructive, looks good. I think if you go to a daily chart here, you can see that perhaps we are a little bit stretched here on the daily time frame, just given the sort of reversal candle here. But perhaps that just means retesting 125 before continuing its uptrend. So all things considered, looks really good here if you're positioned in TLT. Next, we'll look at gold. This one had a nice gap higher today as well. Perhaps some type of fear trade there with the equities and risk markets there really causing havoc, causing some type of flee here into gold. We've seen that basically just trade up to down days over the past couple of weeks here as equity markets have sold off. It is above 104. That is constructive. The fast moving averages are racing higher. It's within this previous range that it carved out here for most of the third quarter last year. So looks decent. Again, still a lot of supply to contend with, but gold certainly has a bit of momentum with it, and silver starting to show some signs of emerging momentum as well. You're about to get a little bit of a cross here with some of these fast moving averages higher. Let's see if it can lift. It needs to get back above really 13 3/4 to break above this prior support level from 2015. So let's see if we get that over the next few days. Oil, this is sort of, the big elephant in the room. This is why the S&P 500, or it's, certainly a large contributing reason why the S&P 500 is struggling so much this year, continues its slide downward to 0.94% down day in USO, and that was off of the lows of some 6%, I think, intraday. So perhaps, perhaps the buying off the lows here is some sort of start to a short-term bottom, but who knows? There's so much damage here. It's going to require time or some type of V-shaped catalyst event to really change course here. So the downtrend momentum still firmly lower. It's oversold on basically all metrics, but as we know, that doesn't seem to mean a whole lot, as it's basically been that way for the past few months. So oil continues to certainly be in the bear camp here, bear trend. Natural gas, similar situation, but not as bad. It had that strong late December rally into the new year. It's holding that rally so far. It basically retraced 50% of it. Let's see if it can hold in here. It closed higher on the day, filled the gap back here from 1228. So UNG, if it can get back above some of these fast-moving averages, get back above $8 and put in that higher low, perhaps we have a start to a bottom here in natural gas, as this one's been truly beaten up quite a bit as well. Now, as far as sectors go, I mean, everything's pretty horrible. The only standout, I would say, today was the semiconductors. I believe there was news here, mergers or some news that may have caused this, but up 26 basis points today. That is constructive. Otherwise, this chart still looks horrible, and everything else pretty much as you would expect it. Everything's pretty much beaten up. Utilities are got crushed today, certainly down 2.25%. So this was a big hit, especially relative to these to the recent standout outperformance. But that and the staples trying to hang in there as the defensive areas that tend to do better in these types of environments. Now, if we go through some of our individual names, we'll go through them quick. Apple clawing back today, down, closed up on the day, 13 basis points. It held these recent lows right around 95.70. Let's see if they continue to do that. Fast moving averages still racing lower, so you need to be careful there. Google, this one again closed flat on the day, recovered $700 price level that it broke below intraday, and closed right into this 8-period EMA, declining 8-period EMA. So again, got to be a little suspect there trying to buy it, but certainly just given the magnitude of this pullback compared to others, still a standout here, Google, as far as strength and relative strength go. Amazon, similar situation, giving back a little bit more of its recent run than Google, but still holding up pretty well. Closed down 0.5% on the day, reclaimed 550 after testing and breaking below that earlier today. So similar comments apply. Still have to be cautious here. Facebook closed down 1%, but above these recent lows, back into this range here. Declining moving averages, these all sort of look the same, so I don't think it's worth spending too much time going through these. We're going to have earnings on a lot of these names coming up soon as well, so that'll certainly change the picture a bit. And speaking of earnings, was Netflix yesterday, and it managed to close flat on the day today. Really wide range, came all the way down to $97 before reversing, so had a $10 bounce off of those lows, which is quite impressive. But again, you still have declining fast moving averages, so you got to be careful here. You really need to see Netflix back above 120 to get some strong momentum, strong buying back in this name. Twitter, this one, I know there were a lot of news out on this one as well. Still looks horrible though. Fast moving averages all still racing lower. The strong momentum downtrend still strong for the bears. But it did close 4% up today, so it didn't, it didn't really push new lows and close on the lows. That is constructive. So let's see if this news, this catalyst, this price action today can cause and start to put in some type of short-term bottom here in Twitter. It's been beaten up quite a bit. So let's see if it can do that over the next few days. Gopro saw a $9 handle, I believe, today, $9.90, but it did get a strong rally. This one closed 4% higher as well, so that's impressive, but of course, this one's been crushed, so who knows who's left in this. I'm sure at this point now we could do some type of bounce action after it fell, some 70% or whatever the case is, whatever the number is in just a few months. So GoPro, keep an eye on that one, even though, it's still crazy. And Alibaba, this one got a bounce off of the lows, but not as strong. Again, this one probably more related to everything overseas and what's going on over there in their markets. So you got to be careful here. Down 2% still. Momentum still clearly lower, and you got to just be aware of that. Finally, Tesla. Really a big underperformer. This one was holding up pretty well this past week or so. Had this quick shot down here under 200, and then it quickly recovered it. But then it really gave back quite a bit today. I'm not sure if there was news out. Probably was. Closed under $200. Fast moving average is still racing lower. Got to get back above 210 or so, back into this prior range to really put in some type of short-term temporary low there. So keep that one on watch. And now let's look at some other names here. ROVI, some trade setups for you. This one, we've been stalking this one for quite some time. This one just great looking. You could see this one very resilient over this week's sell-off. This one's just been holding up, 1625. This support area right in here has been holding like a rock. And you can see as soon as the market got some, lift off a little bit today, this one took off, took out resistance, closed at new highs, new recent highs. So ROVI looking real good there. CPB. This one also looking well. This is Campbell's Soup. Defensive name, maybe a little more boring, but still holding up really well. Talk about relative strength, one that's been ignoring recent weakness, and it's trying to make a run here for the highs, almost a new closing high, but not quite. Next, Macy's actually. This one had been crushed for most of 2015, or at least the second half of it, but it has been perking up. I know it's been sort of newsworthy and talking of buybacks or whatever else. But certainly something to keep on watch. Up 2.5% today. $40 has been a level we haven't been able to get above for a few months now. Let's see if we can get some momentum, some continuation there in Macy's. And then finally, DDC. This one here, not ready yet, but I like this. Again, lots of relative strength in here. Closed higher on the day. Still in no man's land until it can clear above 1020, take out some resistance. This is a name that I'll be watching for an entry over the next few days if we do see the market continue to rally. And that is all I have for today. So hopefully you guys have been surviving out there. It's been a tough market, certainly a change of pace for sure in 2016. Hopefully you've adjusted, and if not, learn from those mistakes, and that's how you get better. So as always, thanks for watching, and I will catch you next time.